For more on Facebook's flotation, we're joined live from Los Angeles by Francis Gaskins, president of IPOdesktop.com. Welcome to First Look, Francis.
Thank you.
Can you hear me?
Yes.
Hi there, Francis. Well, first of all, what we wanted to talk about is, of course, $38 a share. Should you be buying at this level? Would you recommend anyone buying Facebook at this sort of level?
No, I wouldn't. And I think there's a couple things going on. There's the fundamentals with the company, and I can go over those quickly. But there's also the technical issues, and that's how are the world stock markets doing? In the IPO area, when the stock markets go up, IPOs do very well. But when they come off, investors withdraw interest from IPOs, and they just trend down. And so Facebook may not realize it, but the market's going down now, and I think some investors are backing out based on the market's headwinds. They just don't want to risk it with a new company. And you talked a little bit about Mark Zuckerberg, and I think, quite frankly, if he had an independent board of directors run by venture capital people, I think he'd be chief technical officer. I don't think he'd be CEO. And I think he kind of knew that, and that's why he's kept the interest. Now, when you're on Wall Street, it's very clear you have to put out estimates, and you have to meet the estimates or exceed the estimates. And he hasn't learned that. He missed the estimates for December. I think he missed it for March. I think he's going to miss it for June. He blew the GM account. He's accountable for it. He can't pass that off on his COO. He blew that account. So I think what that did is that freezes all the big advertisers in their tracks. I think, well, you've got a couple people like Ford coming out saying how great it is. You don't know whether there was a side deal there or not. But I think all the big advertisers now are going to be forced to reevaluate how effective is that advertising. And it's true, maybe GM didn't use the right way. Maybe they had too many ad agencies. Maybe they didn't have the right control. Maybe this, maybe that. But the other advertisers need to really take a look at that. They need to get a handle on it. And, people are saying social media is in the embryonic stage. Well, that's fine. But that means it's in a very, very risky stage. And you don't pay 100 times last year's earnings for a company that's in a very risky stage. The other problem is in the mobile area, it's the same kind of thing. It's trust me. I mean, Zuckerberg and the people say, well, we're going to figure. Why are they going to figure it out? I mean, if they haven't done it by now, they should have made better progress. And I think he really screwed up. I don't think he's a product visionary. I mean, he designed the Facebook for a desktop application with a big screen. Well, isn't that great? Well, the movement to mobile caught him by surprise. It just took him really by surprise. And for example, they filed the S1 on February 1st, and then they filed an amendment in the last couple of weeks where they said, well, we've just been testing mobile in mid-March. Well, that's 5 or 6 weeks after they filed the S1. So they were totally blindsided by that.
So, Mr. Gaskins, you're concerned, of course, about, therefore, the ad going forward in terms of advertising, going forward in terms of mobile. But where, therefore, do you think the shares should be trading, or indeed in the next 6 months? Where do you sort of see the price being, rather than at $38?
Yeah, I have that. I think the company, because I just don't believe their estimates, and they're trying to tout those around. I think I would pay 50 times last year's earnings, and people say, what about future earnings? And I said, well, I don't believe the future earnings. And if you annualize the March quarter, it's even more than 50 times. And that puts the price of $18 on the stock, which is not bad, because a lot of these social networking stocks peak and then come down, into that range. I'm saying
not so good if you've just bought into the share sale, though. If it's going to be falling by $20 per share.
Right, but that's 6 to 9 months out. I think they're going to miss their estimates. I think things aren't going to go well. I don't think they can do what they can do. And I don't think they're going to get any slack from Wall Street, because Zuckerberg likes to be the bad boy Wall Street. He likes to thumb his nose at them. They're not going to cut him any slack.
Well, does Mark Zuckerberg, therefore, need to change his management style now that Facebook has gone public? Do you think he will change his management style?
He'll never change. He'll never change. He doesn't know what he doesn't know. And the problem is, when you're worth $20 billion, you don't need to know anything. And that's where he is.
And Mr. Gaskins, just a very quick last question. What do you think will therefore be the next Facebook? What's going to be the next tech phenomenon? Well,
it's hard to say, but Pinterest has got a lot of. They've got 30 people. They're a year and a half old, and there are estimates out there that they're entertaining, that they're raised money at $1.5 billion market cap. I think that there's a lot of money chasing these companies that may be good acquisition for Facebook. Facebook is trying to add users, particularly in the in the Pinterest area, or like they did in Instagram. So they'll pay up for companies that can add to their user time on the space. I mean, on Facebook.
So all eyes on Pinterest. Francis Gaskins, iPoddesktop.com president. Thank you very much for all your insights and time. Thinking, of course, that the share price of Facebook will fall to $18 in the next 6 to 9 months.